see and it becomes a behemoth? I mean, how are you countering the competition?
See, the one thing which we have to keep in mind that we are managing a bank of this size, of this complexity and enormity for many years. So when a bank becomes big in size, it has got its own complexities. So I think to that extent we are ahead of the curve. And I'm quite confident that we will stay nimble-footed, we will stay agile, which will probably help us in meeting the competition. And it's a reality that we at State Bank of India face competition for many, many years. It is not something new. The way we have navigated in the past, I'm quite confident that going forward also, we should be in a position to meet the competition.
And on that optimistic note, we end the interview here. Dinesh Kara, he's the chairman of the State Bank of India, Anna, the largest bank in India by assets. Back to you.
Haslinda, thank you very much. Haslinda Amin bringing us that interview from Davos. Lots more still to come from Davos, from the World Economic Forum. Next hour, we'll be speaking with the chief executives of UBS, DP World and Hong Kong's financial secretary. So lots to talk about there. Those are the conversations coming up in the next hour. Later today, we'll be speaking to the German Chancellor, Olaf Scholz. Our editor-in-chief, John Micklethwaite, sits down with the German Chancellor. That's at 3:30 p.m. London time. Stay with us for that exclusive interview. Coming up, we will take a look at the stocks we're watching, including Ocado, the British grocery business reporting fourth quarter sales. We will get to that conversation shortly. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, and building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Picture looks a little sluggish this morning after some modest gains yesterday. Let's get to Joe Easton. He's got a look at the stocks that we are watching this morning, and it seems seasonally appropriate, Joe, good morning, to start with Lindt & Sprüngli, people who can turn chocolate into any shape, including reindeer.
That's right, Anna, and if there's one thing better than a Swiss Economic Forum, it's got to be Swiss chocolate, I guess. So we start with looking at Lindt. They're reporting sales up around 11% in the quarter, saying they're benefiting from travel and also their own sales into retailers and their own stores as well. This is, of course, the luxury end of the chocolate market, which, like most luxury goods, is expected to be a bit more resilient in the recession that's impending. They might see some better sales in some of the lower end of the markets, some of the brands from Nestle and also Hershey in the US have been struggling a bit recently. But if we break down into their key markets, so the European market, the sales are a little bit softer at Lindt, so they're only up around 5%, down from the 11% global number that I mentioned. This stock also trades at a very expensive level. It trades around 40 times earnings, so at a really premium valuation. But look, Valentine's Day, less than a month away. I'm sure they'll do plenty of last-minute sales ahead of that holiday. So if I just go on to a couple of other stocks we're looking at then. So we start with Ocado. This was the worst performing stock on the FTSE 100 last year, down around 60%. Massive losses for those investors. But Ocado today reporting around 15% growth in their sales in the days leading up to Christmas. This is, of course, the online grocery retailer here in the UK, so a pretty good benchmark of what's going on in the consumer space. But if we look at the trading comments, they are actually pretty negative from Ocado. They're saying the size of people's baskets, their shopping baskets, is already getting smaller, according to the company. They're expecting to report a loss now in the first half of this year. So there could potentially be some more declines coming for that one-time market darling. It did see huge growth a few years ago, but has come off a lot, as I mentioned. The final one I'm looking at is Hays. This is the UK recruitment company reporting some pretty strong numbers that might reassure after a warning from Robert Walters, the staffing firm, last week that warned of a decline in activity across a number of its markets. That coming with the UK data today, potentially a bit of relief, as I mentioned, for the UK recruitment sector.
OK, Joe, thank you very much. Our Equities reporter, Joe Easton, there with the latest on the stocks that we have in focus. That's it for this programme for this hour. The European Market Open is up next. This time tomorrow, of course, we'll be dealing with lots of news lines from the BOJ. We'll be sure to bring you all of that. Today, futures a little bit sluggish here for Europe as the sun comes up over London. We'll continue to bring you coverage, of course, from Davos too at the World Economic Forum. This is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
A special Wall Street Week from the World Economic Forum in Davos, Switzerland.
This is Bloomberg Wall Street Week. I'm David Weston.
Join Bloomberg's David Weston as he engages with the foremost business, political, and cultural leaders for discussions on wealth inequality, global power dynamics, and more. Accountability, solution-driven conversations, data insight. This Friday at 6 p.m. Eastern, only on Bloomberg Television and Radio, your global business authority.
Welcome to the European market open a minute to go until the start of cash equity trading. I'm Tom McKenzie in London, and here are your top stories. Beats but no bounce. Global stocks stall as China records its second slowest growth since the 1970s, even as most data top estimates. But Goldman and UBS join bullish bets on the reopening. Disappointing deal-making. Morgan Stanley and Goldman Sachs wrap up earnings from Wall Street's biggest banks, with both seen taking a hit from investment banking. Plus, it is, of course, day two at the World Economic Forum, where we will have more blockbuster interviews, including the UBS CEO and OPEC Secretary General. Let's take a look at the futures then as we weigh up that data out of China. Yes, the fourth quarter came in slightly better than the estimates, of course, slightly less bad than the estimates, and the volatility as we look ahead to the rest of the year in terms of the growth picture in China. And for last year, it was the second worst print in terms of GDP for the full year since the 1970s. The FTSE 100 opening flat, a little bit of profit taking then ahead of what is expected to be the market risk potential around the Bank of Japan. More bond buying, a third straight day from the BOJ there. They now own more than 50% of that country's bond market. It's incredible. The FTSE 100 currently down 0.2%. Here in the UK, we had wage data coming through at a record, posing a challenge arguably for the BOE and underscoring expectations that there will be a 10th consecutive hike from that central bank next month. Over in France, the CAC currently down 0.1%. Germany flat, and the Spanish IBEX in a similar territory, similar picture there. Philip Lane, by the way, of the ECB, telling the Financial Times that rates will have to move into restrictive territory. Currently at 2%. He described that as neutral. Economists surveyed by Bloomberg expect rates from the ECB to get to 3.25% by about the middle of this year. Let's have a look at how things are playing out cross asset then. The US market reopening, of course, after a national holiday yesterday. Futures pointing lower by 0.3%. The benchmark 10-year at 3.54. And the Japanese yen, of course, in focus for us all this week on the back of expectations, or at least stimulus, I should say, not stimulus, easing back on stimulus. Will they do that, the BOJ? There is, of course, a lot of speculation about where they go with that policy decision around yield curve control. 128 on the Japanese yen, not a lot of movement, just 0.1%. Brent crude in focus, $84 a barrel. That's a gain of 0.3%. Goldman Sachs and Jeff Curry saying that there is a Goldilocks scenario now for the commodities sector on lack of investment and that demand coming through from China. I think we're going to look at a couple of individual stories and in the stock space, and one of those ties into that call from Goldman Sachs. Rio Tinto gaining 0.3%. They came out with an update in terms of iron ore production, an increase in the most recent quarter of about 4% in terms of iron ore, and they expect to see pretty decent demand for copper as well, tying into that theme from Jeff Curry of Goldman Sachs. Renault gaining 0.3%. We're hearing reports out of Japan that the CEO of this French automaker will be travelling to that country this weekend to work with Nissan on a potential deal, and they could have that deal by the end of the month in terms of how they restructure that alliance. Important for Renault, of course, going forward. Lindt, this was a beat in terms of the guidance. This is the chocolate maker out of Switzerland, gaining a little over 1% in terms of the guidance on margins, and they expect to see sales growth of between 6 and 8% this year. Let's get over to Bloomberg MLive Managing Editor Mark Cudmore. Mark, you, of course, are also drilling down on all things BOJ for us.
Yes, Tom, good morning. The BOJ tomorrow is a massive binary event risk for global markets. The BOJ has little credibility with traders out there. They are being challenged on an exceptional degree. And that is why they had to buy almost $100 billion worth of JGBs in just 4 days to maintain their yield curve control. At that pace, they would end out owning 100% of the JGB market by the end of the year, which would be absolutely, in explicit terms, monetizing the debt. Yeah, and it is the largest government debt pile in the world. So it's really quite extraordinary things happening in Japan. I want to provide one angle for why they lack credibility. Well, they claimed the slight tweaking of their yield curve control policy in December, which was a surprise to the market, wasn't about economic conditions. It wasn't about winning the war against inflation. They said they're going to persist with the easing. It was about market functioning. Well, that hasn't worked out well. This is the Bloomberg Liquidity Index for Japanese government securities. A higher number means wider spreads, less liquid. And you can see the liquidity started getting worse and worse since about last summer when the BOJ speculation started ramping up. What's actually happened, this red line with the December meeting, is market functioning has got worse since the meeting. And I want to show one one other chart just to show kind of quite how extreme it is. It is the yield curve overall. There's a massive kink in the 10-year. So now this green, dark green line is where we are at the moment. And you can see the yields in the 8-year and 9-year are way above, about 12 basis points, what you get in the 10-year, which is pushed back down arbitrarily by the Bank of Japan. Now, this was the distortion. It's a bit harder to see there probably on TV, but it's a much smaller distortion a month ago before the December meeting. So, i.e., the whole curve is getting more broken since the last meeting. They claimed it was about market functioning. They've made the market much worse. Are they going to persist with this easing, which is completely kind of contrary to the rest of the world, for another meeting? Maybe so. The thing is, if they hold the line tomorrow, they probably have to hold till after April, and there's a new governor. And that's why there's so much speculation ramped up about this meeting. If they do move policy, there will be implications for all global assets.
And that rationale is seeming to break down, isn't it? Brilliant analysis and breakdown of the implications of that all-important BOJ decision. Thank you very much indeed, of course, Bloomberg MLive Managing Editor Mark Cudmore. Now, coming up, we are, of course, live in Davos for the World Economic Forum. Do not miss our interview with UBS CEO Ralph Hamers. That is coming up next. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Exclusive live from Berlin, where German Chancellor Olaf Scholz sits down with Bloomberg Editor-in-Chief John Micklethwait. A wide-ranging conversation only on Bloomberg, your global business authority.
Welcome back to the Open. We are 8 minutes into your European trading day. European stocks just eking out some very, very modest gains at this stage in the trading session. This Tuesday morning, futures in the US, the S&P E-mini is pointing lower by 0.3%. Let's get back to what's happening in Davos then. Day 2, of course, of the World Economic Forum. Major decision makers and market movers are meeting in the Swiss resort town for the WEF, World Economic Forum. Let's get to Bloomberg's Manus Cranney then, who is on the ground with another fantastic guest. Good morning, Manus.
Tom, a very good day to you. Yep, a little bit nippy up here, but we've We've encouraged Ralph Hamers, the CEO of UBS, to join us on the rooftop. Good to see you this morning.
Good morning, Ralph.
So if I look back last year, it was a pretty bruising year. There was nowhere to hide. Equities, bonds, really, really trashed.
Yeah.
Wealth preservation was hard to do. We've had a sugar rush at the start of this year.
Yeah.
Is it too soon?
I don't think it's too soon, per se. It is too soon to kind of talk of a trend, and it is too soon to talk about inflection. We do think 2023 is the year of inflection. Just go back last year, the war, the sanctions, the energy crisis, supply chain still faltering. I do think that the opening up of China, the impulse it gives to consumption in China, energy need, commodity need in China as well, I do think it's a very good signal. It will be supportive of a momentum, but the true inflection point we have not kind of seen yet.
The natural corollary to that is you as a house were way ahead on your call on China. You've reaffirmed it this morning. Is that movement from China, has that been reflected by the clients? Are they much more active in taking China risk?
Well, we've seen more activities, but we have certainly advised them to go long on China and to be overweight on China. That's what we came out with on time, I guess. I think we were all a bit surprised as to the speed at which China opened up, but I think. Advising the clients, and they really have come, and you know that from the third quarter, clients in periods like this need more and more advice. They really come to me, I'm talking to them, and they're saying, well, okay, help me reading these data, help me reading these trends, where should we go? And basically they put a lot of money with us to manage for them, right, in the third quarter.
And are you saying cash first, reflect and wait for a pivot? Or are you saying actively deploy, but judiciously? Which is the narrative for you?
We're still cautious as to the balance that you bring, and but there is moments to invest. There is absolutely moments to invest.
The other big debate is this: peak inflation, peak rates, and peak liquidity. Now, there's two bids there, and there's one offer.
Yeah.
If I look at the inflation narrative, the consensus is building peak inflation, and it will drop precipitously. Are you expecting a precipitous drop in inflation?
We are expecting that every month we will see a further decrease. I think that inflation at higher rates than what we're used to is here to stay. And there's a reason for that. If we truly look at what has happened to us in the world over the last 3 years, we do think that we're going into the era of security. It's energy security, it is about food security, it's about technology security. For that, part of the supply chains that we are still dependent on will have to be rolled back, which basically means you bring labor back, you have to invest. The energy transition is still at its infancy, at its start. Lots of investments will have to go into becoming less dependent on energy from other countries. So I do think that inflation will be higher than what we are used to in the past. So it will not come down to the 2% that we are used to. So we'll have to work with that, but it will decrease from here.
To finish off with the macro then, if it's higher inflation than we're used to, then, Ralph, the corollary to that is higher interest rates for longer. Do you think we make it to 5% and over 5% and stay there 2023?
I actually think that it will peak around in dollars, right?
Yes,
around
dollars.
5%. Euro around the 3%. Swiss franc around 1.5%. And then I do think that they will come off the policy of hiking further, maybe stabilizing, see what damage it brings to the economy, and then lower again.
So that's whether they can deliver that soft landing in the States. Let's talk a little bit about the future and the growth, because wonderful headline: UBS is not buying Credit Suisse. No shock, but nor are you in acquisition mode. What goes through my mind between the chairman and the CEO? You're full bull on China. You told me that last year. Colin, it would sound, is full bull on America. How does that live together? Where will you invest more to grow, China or the US?
We've been very clear from the start. When I came out with my strategy 2 years ago, just over 2 years ago, we said, it's a barbell, right? So we will focus on Asia, that's where entrepreneurial growth will be, including China, and we will focus on the US because that's where entrepreneurial wealth growth is. as well. So from the beginning, we've said there is a two-pole strategy here in terms of growth supportive. Clearly, China wasn't there from a COVID perspective, but long term, we know that that's where you need to be. And in the US, we're already very large as well, and that's what I've said from the beginning as well. That's where we need to continue to invest, which is what we did.
And that investment scenario, if I look at the cost-to-income ratios in the United States, they're high. They're high relative to everywhere else for you, around 80%. So this is a bit of a roll of the dice. If you're going to grow in America, you're going to have to spend and look large. Are you prepared to do that with a cost-to-income ratio at 80%?
Yeah, we have been very clear on our commitment to the US already from the start, a year and a half ago, as to what it is that we need to do. First, we need to grow the scale. Second, we need to support our financial advisors with much better digital tools. We need to develop our banking product offering as well on both the loan side as well as the deposit side. And we need to invest in digital also in order to help scale for clients to really access some of the information themselves. And we're launching some of these products as we speak.
Are you going to be able to then buck the global trend? Goldman's are cutting jobs. Other European houses are cutting and reviewing the fat of the land. From what you're saying to me, you're in expansion mode. Are you in full hiring mode and not a retrenchment mode?
We're not in retrenchment mode. We're also not in full hiring mode. We are hiring what we call for critical jobs. We are in a growth mode. I'm sorry to say, and we are a global wealth manager. That's where we see the growth. We see it in Asia, we see it in Asia Pacific, we see it in the Middle East. We are hiring, absolutely, because we have the momentum. And you've seen the third quarter results. On asset management, net new money coming through 18 billion. On net new fee generating assets in wealth management, just over 17 billion coming through. You see clients put a lot of trust in us on this one. So we're really bucking the trend if it comes to growth in wealth management and asset management.
Do you think we'll buck the trend, Ralph, and not have the classic recession that you and I would have lived through in various cycles? Are we going to skirt a recession in Europe? We haven't touched on that. Will we skirt a recession in Europe?
If there is going to be one, it's going to be a very short-lived and mild one.
And in terms of the wealth that comes into you, the inflows that come into you, and we'll dig into this a little bit more in 2 weeks, but that inflow that we saw, has there been a material inflow from the Credit Suisse debacle?
I was giving you the numbers third quarter.
I know.
It has nothing to do with Credit Suisse. All has to do about our own strength, how we deal with our clients. Our clients put so much trust in us. I go out to clients all the time. They really want our advice. We have a credible offering. That's what we're investing in. They know that wealth management is what we do. It's not what we also do. This is our core business.
And to make those inflows that we talked about stick, is it leverage? What is it they really want? Is it product, alternative product? Is it leverage, or is it credit? What is it that drives them to stick and hold with you?
It's the trust and the relationship with the advisor for sure. It's good investment advice, and you know that our CIO is really good at that. His strategies have worked all the time. He's also calling out the area of security. He sees it very, very clearly as to where things need to go. It is about private markets for sure, still, and it's about sustainability.
Okay, Ralph, we'll pick these topics up. Let's see what the fourth quarter brought to us. We'll catch up in a couple of weeks. The message from Davos there is about the little bit of caution. Let's not let the horse races out of the gates just too quickly on risk. Ralph Hamers, the UBS CEO. Tom.
Manus, really, really great. Really enjoyed that interview. Thank you very much indeed. Manus Granny, of course, on the ground in Davos at the World Economic Forum. The CEO there of UBS saying that they are advising their clients to go long on China. They see 2023 as being an inflection point. Coming up, we are speaking with DP World CEO and Chairman Sultan Ahmed bin Sulayem. That is live from the World Economic Forum, of course, in Davos. That is next. This is Bloomberg.
race, go.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun.
We are joined by UCLA quarterback Chase Griffin, not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Season is here.
Wall Street expecting a bit of an ugly season. People may be overly pessimistic.
We know growth is slowing.
Companies are going to have a lot of questions to answer.
Bloomberg breaks the numbers first.
Tons of banks coming out.
Some of the worst returns when it came to profit.
Markets really like that number.
With exclusive expert analysis.
What's your confidence in your outlook?
You got to be selective.
We still see a lot of opportunity.
There is a light at the end of the tunnel.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open. We are 20 minutes into European trading day. Losses now just of 0.1% across the broader European index. One major index in Europe that is in the green. The FTSE Mid posting gains of 0.2%. Futures in the US pointing lower. The S&P E-minis by 0.2%. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. China's economy grew at the second slowest pace since the 1970s last year, but fourth quarter data was better than economists had expected. GDP growth slowed to 3% in 2022 as the country doubled down on its now abandoned COVID zero policy. Growth slumped from 8.4% in the previous year. Meme stock investor Ryan Cohen is said to have taken a stake in Alibaba and is calling on the Chinese tech giant to increase its share buybacks. A source says Cohen built up a holding worth hundreds of millions of dollars in the second half of last year. Cohen has a strong following among meme stock investors and played a central role in the frenzy over GameStop. China Evergrande says auditor PwC has resigned after disagreements over its 2021 financial statements, adding to pressure on the indebted developer. According to a regulatory filing, Evergrande says the two sides could not agree on a timetable and scope of work. In a separate letter, PwC says it didn't receive key information needed for its audit work. That's the Bloomberg Business Flash. Tom.
Laura Wright here in London. Thank you very much indeed. Now, the global elites, of course, are in the mountains again for the World Economic Forum's annual meeting. They are back in Davos for the first time in 3 years. On the ground for us, of course, is Manus Cranney with another fantastic guest. Manus.
Tom, thank you very much. Let's talk trade. We have Sultan Ahmed bin Sulayem, CEO, chairman of DP World, the man who knows where the flow is going. Mr. Chairman, welcome to Bloomberg. Thank you for joining me. I don't know, I want to get a sense from you. The IMF and the World Bank are full of doom about the outlook for the global economy. How do you view the prospects for 2023 this year? Are you as negative as that?
I'm not as negative as that. I think there's a lot of drama in the media. Yes, the World Bank has numbers. But I don't know whether all that will happen in 23. We heard it's going to be 2020 was going to be bad, and we were preparing for it. And then COVID came instead of the financial issues. We understand there are issues, but I think that business is capable to deal with it. There is a resilience. We learned the hard way during COVID, and I think we can overcome it.
Is China reopening the single most important piece of the global trade puzzle?
The question is it positive? Of course.
Yes. Is it? I mean, I think we all know from a sentiment point of view, it is positive. Absolutely. What's it going to do to world trade?
Well, definitely, China has to catch up with what they have not produced. During the lockdown, factories were closed. Orders are piling. It's very evident when you order something or you want to buy something. Many items today have long-term delivery. That should fix it, I hope, in the next few months. They just opened. You can't expect it to happen now, but I expect to see some changes toward the last maybe quarter of this year.
The question then is, can the world wait until the last quarter of this year to avoid a global recession?
Well, the world have dealt with it during COVID. They have dealt with it in the past. I think people learned to buy what they cannot buy from China from other places.
Tell me this, Treasury Secretary Janet Yellen, she's going to meet in Zurich with Vice Premier Liu. How important is it America and China progress in their relationship?
It is very important. Two of the biggest economies in the world. We can't afford a geopolitical problem. As businessmen, we know how to run our business, we know how to make money, we know how to cut costs. What we cannot know is what is happening in the mind of these big two countries. So if they're going to meet, that's a good sign. And if they're going to resolve some of the issues, to remove the fear. You see, all this gloom is about fear, about geopolitical, about what's going to happen. All these things are fears. And leaders can remove the fears.
So that would alleviate some of the drama and the fear of the world. One big theme between China and the US, which has come to talk more and more about, is onshoring and friendshoring. That is happening. What can you tell me about the impact of that on trade flows? And is that a threat to DP World?
Let me tell you, nearshoring has been discussed many times. Today, I think after the COVID issue, people realize that it's not only cheaper to produce outside China, it's also more reliable for the supply chain. Because once they close, the whole supply chain closed.
And will that momentum grow? Will onshoring, friendshoring grow? Is that going to ratchet higher?
It will happen. Let me tell you, for example, Apple today, they put a factory for the iPhone in India. They decided already.
Yep.
So they are going to produce for the consumer market. But what's going to lead it is viability. If it's going to be viable, they'll do it.
Okay.
But nobody's going to do it for strategic reasons.
On supply chain, something that you and I have touched on several times when we meet, are you hiring more engineers? What are you going to spend on hiring on supply chain logistics?
On the digital side, we are hiring. On the digital side, last year we announced establishing our DP Meta World, which is our metaverse. Just the beginning. I believe there are many technologies today emerging at the same time. You got the metaverse, you got the robotics, you got the AI, all in one time. And imagine leveraging in our business on that. The rewards are unimaginable.
And on logistics tech, let's just finish off on that. I mean, the world's spending $9 billion a quarter. How much are you spending on logistics tech? We're up against the time, and I want to get to the UK.
I don't have a figure, but we are spending a lot. The biggest single investment today in hiring is logistics. No doubt about it.
That's going to be your alpha. I want to get to the UK because the pound has imploded. The economy is under serious pressure. Are you seeing material drop in trade flow from your ports in the UK? Anything material in the UK eco outlook?
No material. Actually, UK didn't have a problem economically. They have political problem. And when the leaders, give the wrong message, everybody get affected. Today, I think they have a good leadership. They have a good plan. And the economic fundamentals of the UK are very strong. It's a big financial center. Nobody can deny that. And the ports are doing well.
Do you think the Liz Truss, the damage that Liz Truss and Kwasi Kwarteng did to confidence is gone? Has that passed?
I think it's going to go. If whatever left of it is going to go, because people need confidence. They need a government who will say, we want to do the right thing.
So the pound is not technically on its knees. It is bounced from parity. But has that presented opportunities? Are you prepared to deploy more capital into the UK?
Absolutely. We are expanding our port right in this middle crisis. We're adding a fourth berth.
How much will you spend in the UK as an expansion? Approximately, is it $1 billion expansion?
I think something like 300 to 400 million pounds for this expansion.
Okay, Ireland. Where does Ireland, if at all, fit into your thinking? Have you visited? Have you looked at it? I mean, it is way ahead in terms of GNP relative to the UK, and it is the access and gateway to Europe. Will it play? Will it feature for you?
It might. It might. Let's see how it will play. Because we follow cargo. We are a company that follows cargo. So if cargo is going to be there, we'll be there.
Where's the biggest opportunity for you as you look into 2023?
Utilizing technology, leveraging technology, combining it together is going to give us an amazing opportunity, in my opinion.
Chairman, thank you very much for dropping by the Bloomberg studio. Great to hear your views and indeed your outlook. The drama that the media is making out of recession, maybe it just makes great headlines. Chairman, thank you very much. That is Sultan Ahmed bin Sulayman, Chairman and CEO of DP World. There you go, Tom. Apparently we make drama out of all of these headlines on recession. We need to be a little bit more confident. Chairman, Tom.
Manus, fantastic stuff. We are just reporting what the IMF and the World Bank are saying. But thank you. You got some headlines out of that interview, and that's the most important thing. Manus Granny with the Chairman and CEO of DP World in Davos. Now, looking ahead, we have got, of course, a big interview coming up with German Chancellor Olaf Scholz. What an interview. Bloomberg's editor-in-chief, John Micklethwait, will bring us that exclusive conversation. It will be live. Stay with us for that. Let's check in on your markets then, 30 minutes into the trading day this Tuesday. And you do have a bit of downside across European equities now. The benchmark down 0.2%. The chief economist at the ECB, Philip Lane, telling the Financial Times that rates will need to move into restrictive territory, currently at 2% from the ECB, of course. The DAX currently down 23 points. The FTSE 100 off by 11 points, trading at 7,849. Wages coming in, the highest wage growth on record for the UK, underscoring arguably the need for the BOE to hike again. 50 basis points is the expectation at the next meeting. Let's switch it over and see how things are playing out across sectors. The other factor, of course, was the China data that investors are weighing through for the fourth quarter, but for the full year as well. Growth coming in, yes, above the estimates. 3% was the growth picture in 2022 for China as it wrestled, of course, with COVID zero and then the unwinding of that policy towards the end of the year, but well below the target the government had set itself. And then you have the questions around population declining for the first time since the 1960s, when there was mass starvation in that country. Across your sectors, you're seeing gains by chemicals leading up 0.2%, very modest. Just 5 sectors in the green this Tuesday morning. At the bottom of the list, personal care products currently down 0.6%. You're seeing a bit of strength in the currency space when it comes to the pound, 122. The Bloomberg Dollar Index is range-bound. It is, of course, a big day again for US bank earnings. That season continues. The numbers coming through. Goldman Sachs and Morgan Stanley due to report today. And who better to break it down and get a preview than Bloomberg's Charlie Wells. Charlie, what are investors going to be honing in on when it comes to Morgan Stanley and Goldman?
Well, the big theme really is going to be on that investment banking revenue slowdown. So JP Morgan had a miss on Friday, revenue down 60%, about Citigroup's same ballpark. So that's estimated to be in a similar range for Goldman and Morgan Stanley later today. But there will also be a focus on Goldman Sachs' strategic direction. Goldman had a really difficult 2022. Their EPS estimates have been on what I would call a journey, a downward journey, from about $11.60 this time last year to about $5.50. Now,
that's quite the journey.
That is quite a downward journey, and that follows a major reorganization and major layoffs.
And it's the retail part of the business as well. They're having to rethink that. How much divergence do you expect to see between the banks that are reporting today and the banks that have already come through with their results?
Tom, funny that you mentioned retail, because a lot of the banks that have already reported have large retail operations. So they're focused a lot on the consumer, whereas the banks today are more pure play investment banks, right? So that's Goldman after the retrenchment from Main Street, and also Morgan